Today I wanted to put out an extra video to respond to what's happening in the stock market right now. Now it's something that every investor will face at least once, but for some of you, it's your very first time. It's the dreaded stock market crash. Now if you're brand new to investing and you just looked at your portfolio, take a deep breath. And if it's more than a dip and your portfolio has crashed to the floor, then take a seat. I just want to let you know that you're not alone. And much more importantly, this moment will shape you into a better investor, and you can profit from it if we take the right steps. Now, if you're like most, you're checking your investment app several times a day and seeing your stocks in freefall. Months, even years of gains evaporated into thin air, making your stomach sick and your eyes water. This market crash is a shock to everybody, and we're all scrambling to find out what to do next. Perhaps your natural reaction is to sell everything and save the remaining value. And if you're new to stock market investing, you could even start to wonder perhaps you made a huge mistake, that the guy in the bar was right, it's all a scam. Let me tell you right now, what you're feeling is completely normal. You're going through an emotional roller coaster, and every investor, brand new or seasoned, will go through it at some point. The difference is the people that get through the stock market crash easily and even benefit from it will respond to it strategically. They won't let their emotions take over or react with fear or poor judgment. Make emotional choices and you'll play into that fear, making the situation 10 times worse. In fact, those that are building wealth for their family and their financial future will see opportunity and they'll be ready to capitalize. But first, it's important to understand what a stock market crash actually is, so we understand what to expect and the lay of the land. Now, in simple terms, it's a sharp decline in stock prices over a very short period of time. It's caused by panic, uncertainty, and big shifts in government policy. Exactly what we're experiencing right now. These drastic drops happen so quickly that the ripples of panic and concern dominate the news feeds and the mainstream discussion shows. It spreads like wildfire, and the 24/7 news feeds and social media fan the flames. The thing is, stock market downturns and even crashes are normal. It's all part of the game. In fact, they are expected and often predicted shortly before the time, although that's not always the case. Indeed, over the past 100 years, there have been 25 stock market crashes, a drop of 20% in the stock market. And you know what? After every single crash, there was a period of recovery and then growth, sometimes explosive growth. So going by historical data from the past 100 years, the stock market has crashed on average every 4 years, and has been followed by a period of recovery and growth every single time. The crash is always temporary, and in comparison to the recovery and growth time, it's relatively short. So if that's the data, what can we do with it? For those that have been in the stock market for a period of time, they understand this and they remain calm. They don't let their emotions take over the decision making. They rely on this historical data, plus their experience and wisdom that they've built up over the years. And they know that panic selling will lock in the losses. Selling your stock today will lock in all the loss of value and you'll never get it back. They simply hold tight. They understand that the market will recover and bounce back. It will start to grow again once it's recovered and the market conditions are right. You may have heard the term that time in the market beats time in the market, and nowhere is it more apparent than right here. It can be easy for a new investor to be swept up in the drama and the panic on social media and on the news feeds. After all, most of the news feeds and channels have their own agenda. Don't be fooled by this. Do your own research and look at the long-term horizon. Ask yourself, will what happened today or even next month matter in the next few years or decades? Or will this period of uncertainty iron out with periods of recovery and periods of growth? Dips, corrections, even major crashes are barely visible over a time frame of 20 or 30 years. As world-ending as it may seem on TV, over the course of your investing journey, it will be no more than a blip. And remember, this money, this investing journey is not for you. It's for your future self and your family. You of today, next year, or even 10 years won't be spending it. It will be spent in the future when this stock market crash is long forgotten about. If you're confident you had a solid investment plan before the crash, don't change it. The panic is just temporary. Keep investing and stick to your plan. And keep it steady to weather the storm. So here's a few things you don't want to do from personal experience. They will make you feel worse and make your situation worse. Don't sell your stock, especially at panic or fear. Trust me, you'll regret it. And when the rebound takes off, you're going to miss it. Don't check your portfolio 10 times a day. It's not going to make you feel better. In fact, it's going to make you feel worse, and it could even consume you. Limit what you watch on the news and social media, and certainly take no advice from anyone being dramatic or fear-mongering. Right now, everybody's an expert on the stock market. Even the guy down the bar who's telling you he told you so. Turn them all off. But there are some excellent things you can do that experienced stock market investors would recommend. The most important thing is keep investing. That's right. Keep putting your money in the stock market each month as planned. Don't slack off. And don't put less money in the stock market. Right now, they're on sale. Buying them now will lock in that discount and give you greater gains for the future. And remember, if that future is 15 or 20 years away, this is just a blip. Today's crash is irrelevant to future you. The fear-mongering being peddled by TV stations and social media is irrelevant. Another thing I do, which is really helpful, is listen to experienced stock market investors and their experiences of previous stock market crashes. Being informed by smart investors who are knowledgeable of past history gave me confidence and peace of mind. Instead of panic and fear, they see opportunity and fortune. And you know what? Now so do I. As Warren Buffett famously said, be fearful when others are greedy, but when others are fearful, be greedy. And after being through over 20 stock market crashes, Warren Buffett is a true expert and not following his advice and his wisdom, I would think we could all agree is foolish. Being prepared is the smartest choice we can make and something we can check every 3 months to ensure that we are on track with our financial goals. The first thing to be prepared is to make sure we have an emergency fund set up and ready to deploy. Now this is just good financial planning, whether there's a stock market crash or not. It should be a minimum of 3 months of living expenses in a bank account that's accessible at any time. And if you put it in a high interest or an online account, you can get 3 to 5% return on that money when it sits there. The main point, it's there, ready to deploy. Now not only will it take away your stress and worry, it will stop you having to cash in your assets at a low value and wrecking your financial goals. When the stock market crashes again, the last thing you want to do is cash in your stocks at a low value because you need the cash. Have your emergency fund ready at all times, and if it's not quite ready, build it up. Also, if your dollar cost averaging each month, putting a small amount of your salary into your investment account each month, then make sure you're not taking it from your life expenses. Don't leave a bill unpaid just to buy some stocks on sale, and ensure your credit card is paid off in full every single month. Take care of your expenses first, as long as they're a need and not a want. You could also check on a regular basis the diversification of your portfolio. If you're all in one market, like tech, which was doing fantastic the past 2 years, you could be in for a big shock. Spread out your portfolio and make it more broader so you can minimize the hit when it comes and spread out your risk. Having blue chip stock ETF will ensure you're diversified at all times of uncertainty and volatility in the market. Don't be tempted to go all in on tech stocks just because the returns have been higher these past 2 years. As history shows, this will change over time, and if your portfolio is not diverse enough, you may regret it. Finally, check in on your long-term plan on a regular basis and make sure you're headed in the right direction. It's so easy to get distracted with all this doom and gloom and noise that surrounds us. The important thing is we're heading in the right direction and we don't get off at a station on the way there. After all, a stock market crash does not change your plan. The way I see it now, it tests your commitment and it gives you an opportunity to stop and check it. So if you're a new investor and this is your first stock market crash, congratulations. This is your first big test as an investor. And rest assured, before you know it, the stock market will be in recovery mode and then it will start to rise. Eventually, the next crash will come, but hopefully you'll be much better prepared for it. After all, it's the investors that stay calm, committed and consistent that win in the end. The stock market crash will remind them to check their goals and provide opportunities to take advantage of. So as we navigate this uncertainty over the coming weeks and even months, remember to listen to the positive influences and stay away from the dramatic ones. And remember, patience is key, not just now, but over time. The stock market is simply a device to transfer wealth from the impatient to the patient. Warren Buffett said that. Trust me, you've got this. In the meantime, if you check out this video here, I'll go over my experiences of first investing in the stock market, and I'll take over some of the decisions that saved me thousands of dollars. I'll see you there.